Welcome to Friday Flows. This is where I go through investment flows in the ETF universe, kind of give you an idea of what investors are doing and thinking. Over the last couple of weeks, it's obviously been a risk-on sentiment. This week, it looks like it's hard to tell what people were thinking this week, honestly. Going through the individual flows on the downside, SPY, the big one, $4.5 billion outflow this week, which typically would say risk off. QQQ, Invesco's technology based, 1.7. So again, kind of a risk off week, but at the same time, S&P 500 was the biggest inflow fund of VOO. So again, getting rid of one, going into another one. On the upside, some of the areas of with flows were definitely on the bond side. So again, it was more of a risk-off week after a couple of weeks of really jumping in. One of the other ones that I thought was interesting, JPI, is actually one that, full disclosure, I use in my portfolios. This is one of the ones that we'll jump into here in a second. Come on a broader view of what people were doing. Last week, equities, fixed income were the big movers. As you can see, even over a week, big moves on the last yesterday, going from equity to fixed income. But over the last 5 days, that still includes kind of last week, people feeling good about themselves in the equity side. We'll see what that looks like next Friday as people look like they're going back to the bonds, fixed income side. So we'll see what that looks like next week. From an overall sector standpoint, equity, broad-based, quite a few in the global equity this week. Again, then fixed income is kind of where everything else is, where people were putting their money. Where were they taking it from? Information technology. This is fixed income from the government side. Gold was another big loser last week. So again, this is just kind of a broad view of what investors were doing. Jumping back in some of these individuals' name, SPY, again, one of the bigger funds that is out there, sees big movements day to day, week to week. You can see over the last month, investors in cumulative are still somewhat risk on, but these last 3 days were big numbers out after some steady flows over the last couple of weeks of people feeling like maybe they're missing out. But this week they changed their minds, headed for the exits again. QQQ, this fund always has big moves from day to day. As you can see over the last month, just big ups and downs as people kind of figure out, is it risk on, risk off? Over the last month, it's lost over $2 billion. But this is one that just moves quite often. But this is gives you an idea of what investors are thinking from a standpoint of it's still not time to jump back in to information technology. Now, whether that's wrong or right, we'll see over time, but that's kind of been the sentiment from investors. And then JPI, again, this is one of the ones that I actually use within my portfolio. This is a fund based on the S&P 500, but it has a hedging strategy around it. So a little way to get some extra income. Dividend yields on this are quite high. And this is also an institutional held fund. So most of the shares are owned by Morgan Stanley, Bank of America, and those are typically advisor-led shops. And as the flows you can see here over the last month, this is more of an advisor-led flow. Once they make a decision, this is where you should go. They're going to slowly over time be putting into this fund. Now, is that exactly what's happening? I don't have that type of data, but with who holds it and how the flows move, that tells me, that those are advisors making those decisions, unlike the S&P, SPY, where, they're kind of jumping in day to day of what works, what doesn't work. So anyway, I hope this was informative. I hope you had a great week, and I hope you have a great weekend, and I will see you next week. Have a good one.